Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's January 4th. This will be our chart lesson for the day. And it was a nice uptrend, but there just weren't many trades today. There really weren't. We spent more time going sideways from here to here, and then we moved up just a little and went sideways again. And we did have an FOMC announcement today, but it was basically meaningless. It didn't do anything. Prices just kind of lingered waiting for it, and then once it happened, not much happened after that. So you will notice there's a trade right after 1 o'clock here. It was obvious that the announcement today didn't mean anything. Um, Once we had a big overshoot here, and we tried to go higher to make that new high, but couldn't. So once we started lower, I measured that move, and then we just looked for a measured move. And where does that get you? Right to this trend line. Of course, you wouldn't have drawn this trend line probably till now, till you had this first swing here, and then you get a confirmation of it, so a chance to go higher. So, yeah, want to point that out. And also, I would have measured this move here in the morning and looked for that. We didn't get anywhere near that. You can see we came up a couple of points short there. But that would have been my target. Notice where that target is at the upper trend line there. I just drew that off the highs. And once we had this, and generally if it points to the same location, that's a good sign, but didn't matter. We didn't get there. We just kind of creeped up. We ended up getting notice this line is the same as this, and I just drug it up to those highs right across there, and it ends up being the high. And so all that really happened was instead of this being the upper trend channel line up here, it turns out to be right here. So, and there is a shorter term one working up here earlier as well, but we had the big overshoot and then a correction, and then we just started over again. And that's pretty common. And generally, when you see that, there'll be a bigger pattern there. Um, and this trend line would have helped you here because it would have brought in this trade here, both of these later in the day. Um, but yeah, not a lot of trades today. So, but let's back out. We'll talk about what's here. It won't take long, and then we'll wrap it up. But I wanted to show you the overall picture and the content. And one other thing I want to show you, I get this a lot, especially from new people. They'll spot a second entry and wonder why it didn't work. Um, Here's a good example of one right here. Notice you made a new high, you pull back first entry, and then you pull back. So there's a second entry right there. But hopefully you understand that, the context of the big picture says, hey, we're not going long right here because there's strong resistance right there. And so that's why you don't want to go long right there. Yeah, there's a second entry there, but you got to look at, you don't, we're not pattern. I guess what I'm trying to emphasize is that people get caught up looking for patterns. And yeah, that's important. You have to learn to spot the patterns that we watch for, but we are not pattern traders. You don't trade every pattern that comes along. Here's another second entry right here. This is basically a double top, so you can count that as a new high. You're pulling back first entry, and then it pulls back again, and it gives you a second entry. You might have treated that like a failed break lower, but that's a very neutral signal bar. Look at it. That's a 1 bar trading range. So I would wait, and then next thing you know, you get the trap, and then you get a good setup, and then it takes off. So there's another second entry that I wouldn't take. Here's another one right here. Notice you got a new high, pull back first entry, pull back second entry. But look, this is your signal bar. Look how bearish that is. And by the time this one completes, it's fairly bullish. So you might say, hey, if it breaks above this one, I'll try to get in, maybe drop a limit order, and then it would have worked. But your second entry is right here, but you're not taking that because it's not a good setup. It doesn't fit our rules. So I hope that's clear. Just remember, we're not pattern traders. You look for certain patterns but they've got to set up at a spot we're looking for prices to reverse, which are what? Key entry points. I say this over and over and over. Maybe I hadn't said it in a while, but we're interested in key entry points. Where are the key entry points? The trend line, sometimes the EMA, and the horizontal support and resistance. All a trend line is a slanted support and resistance line. And look what happens. Where do all your big moves come from? They generate here. Look at this big move. Where did it generate? Off the trend line and the EMA. When they come together like that, that's even better. Here's where the next big move really generated, right in here. Where did that happen? This key entry point, this trend line. Of course, you'd had your trend line as soon as that swing happened. This would have confirmed it. You know it's key entry point, and look at it go. Where'd the next big move right in here come from? Key entry point, right off that support and resistance and right off that EMA. Where did the next big move come from? Right here, right off a key entry point. So you're looking for these setups at the key entry points. If they happen somewhere else, you probably want to ignore them. So make sure you understand that, because I get that a lot from new people. We've had a few new people lately, and so that's been coming into play. But let's back out, talk about the trades. First trade I saw was right here. I made this one green, but it is real close. It really could be, it's real close to being blue. The only reason it's green is that you've got this correction right here, and that's your first break, and you don't get any retest attempt to make a new low. And so you got to be a little bit leery, but look how bullish that is. I like entering on a stop over right above that if you can get in. But again, your safety stop has to go below this bar because it made the lowest low. But look what happens here. You draw your trend line off these first two. Really, you could have had it off your highs and then drug it down, and that really would have given you this bounce. Of course, that's too early, but you would already had that in place. So by the time prices get to right here, if you start early like me around 7 o'clock, this is already, most of this is already here. It's easy to find, and you're just waiting on prices to come back and give you a setup at this key entry point, which is this trend line that's running congruently with the EMA there. That's a perfect setup. Only thing I didn't like here was we didn't get a break and a new low, but this thing is an uptrend, and this bar right here, the red one, confirms that trend line. It's a double touch of that EMA, a double test, and then you get a real bullish bar. So go long right there. Put your stop right here. It's green because it didn't follow the rules perfectly, but it's close enough. And look, here's another second entry right here. And this one is real tempting to enter. Even though that looks like a doji, it's one tick from the high, so it's a fairly bullish bar. But notice the new high. You pull back first entry, you pull back. There's a second entry in a big uptrend. The only reason I don't like this one is because it's off the upper side of the trend channel. Maybe that's a midline, but we don't have enough evidence to show, so I'm not going long right there because there's too many chances it moves up just high enough to get you in and then turns down. And it would have worked, but then it turns down. And then we're coming back again. And now we've had an overshoot, so there's a good chance that we may not even get a retest of the high. We may just reverse. So even though this is a first entry, it's really almost a repeat pattern of this. It's a first entry. It's right off the trend line. But we had this big overshoot, so I would at least look for a break and attempt to go lower. And notice what happens. We get the break of this little short-term trend line. We make a new low, and then it reverses. So if this bar would have been bullish, I would have liked going long there. But you're better off to wait and see if you get another little trap, which it turns down there, and it does make a higher low. But it can't get above that bar, and it ends really bearish. And then you've got this resistance that's been across here. So then I'm a little leery about entering again. Then it pulls back yet again. And notice that we made this new low, and then we make a double test back of this support area, and you get a nice bullish bar. The only reason this one is not blue is because it's right back into that bar again, that resistance right across there. There's a good chance it goes right there and then turns back down and just kind of bounces around. So I was a little leery of that one. With that double test, though, and the fact that we've tried to go lower here several times, there's a good chance we may go a little higher. And it would have worked, but again, I think you're better off to skip it. And then notice what happens. You got a little channel here, and you get a failed break, and you get a big bearish bar. You might have considered going short right there because it actually went higher and then turned and went right out the other side. If yours did that, I'd be okay with you going short right there. So we'll go ahead and mark it. But I think you're almost always better off to wait on a lower high, which came here. And notice what happened. It tries to go higher and it fails and turns back down. This is really your signal bar, but this is so bearish, it's just hard to pass up. Again, you got to be a little bit careful about these lows. At that point, I would have moved this down a little bit. And if you can get in this one, this lower high with enough room to get out, I'm okay with it. You might let it break lower and drop a limit order back here right at the low. If you went a tick back in it, you probably wouldn't have got filled. And it would have worked. And then you get your break here, move to a new low, and it reverses. And you also had a measured move right in here about where you were expecting that trend line. Remember, we measured that first move, put it over here, and there it is. And so it's tempting to go long right there, but since that bar is neutral, I would wait and see what happens, and then it tries to go lower again, and it does confirm your trend line that you would have drawn from this point to this point. And so go long right there. And this, you probably can treat this like a failed break lower, and you might have considered that on this trade too. And if you did that, you might go long there. We probably should give that one a green, but I would wait. And this was your better trade. And notice what happens. It pushes up. It tries to turn down again, but it confirms that trend line. That's a little bitty bar, 2 ticks. That's a real low risk entry, so I like going long right above it. Really, that's your signal bar right there. I got it in the wrong place. Just go long right there, and you're probably coming back to at least here, and you may push on through. And this, a lot of times you'll catch the low of the day, or the low, that would have been the low of the morning, really, or a major low for the morning. And look, it did turn out to be a low of the morning. Whenever you find these failed breakouts, this could have been a major high of the day, but it turns out it's a major low. And a lot of times that's what will happen. It'll fail out either side a few times before it finally takes off. And so this was really, if you got in right here, you would have had a runner. It runs all day. And then look what happens. And then you run into this resistance here. But look what's happening. We're just going sideways. A lot of stems on both sides. I just kind of sit idle there. And like I said, you did get a second entry long there, but it's right back into that resistance. And at this point, I would have moved this up to those closes. But notice this right here. And the only reason this one is not blue is because it's right back into that resistance. But notice what happens. You make this little low right here, the swing low, and then it tries to go lower once, it tries to go lower twice. So it's a double test of that level again. And we're expecting prices to probably go higher. If it's all going all the way up to here, that you might catch a huge move. So I kind of like trying to catch that one, but it's just not a perfect setup. So anyway, that was the reason that one's green and not blue. Then of course we're moving higher, and you start finding this resistance right across here. And I actually would have this line, I'd moved it up to here first, but then when it starts overshooting it there, I moved it on up to here, like so, and you can see it came back into play here. But this line doesn't, it's static, it doesn't really change. And so then notice what happens. We're working sideways, but where are prices likely headed? They're trying to come back to the trend line, and that's what we're waiting on. Notice there's a little trend right there, and you get a close outside, and you try to go lower. You can't make that new low because this trend line's the bigger pattern. And so when it breaks above this bar, go long right there. And you're probably going at least to here, and you may end up going all the way up to here. And notice that's where you get another big move, a key entry point. And then you make a new high, pull back first entry. There's actually a second entry there, but guess what? It's a fairly bullish bar, but you're not back. You just came off the high side where price is likely going before you get another setup, the other side. And we end up closing outside here. So you definitely don't want to go. If this bar, if prices would have broken higher there, I probably would have taken that one. But you get that little trap and another bullish bar, just go long right there. And that's another, this one's actually after 2 o'clock, but it's so close, and there's so few trades today. that I thought it was okay. I went ahead and marked it just to show another trade. It would have been a good trade. And actually, you would have had a failed second entry short here, so you'd had another chance. And this is one I probably would have added on. I did want to talk about what else. There was one other thing I wanted to talk about. I can't remember what it was now. This was an FOMC day, and you got to be real careful anytime there's any high volatility news. So really from about noon, which started right in here somewhere, notice how not much at all happened between there and 1. Everybody knows that news is coming out, and this didn't really trigger till after 1 o'clock. So when you saw that 1 o'clock hit and the news came out and nothing happened, when it broke higher, I'd probably be okay. But you had to be aware of that news there, so that might have kept you out of that trade too. So I did want to come back and mention that. But yeah, just not a lot of trades today. A lot of sideways action. You had the FOMC news. You needed to be worried about that. Another thing you probably would have looked for here is this little channel here. Once prices went higher, I'd look for a measured move, and you can see that's about what we got. We went a couple of ticks higher, so that would have been a nice target once we started heading up here to exit. And that's really it. So I'm not going to beat around the bush. It's just, it was kind of a slow day. This is what I thought yesterday would probably be like, but it didn't turn out that way. So we'll see what tomorrow brings. But I'm going to wrap it up for the day. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.